Hello, good evening and welcome to Business Live. Coming up in this bulletin, Bank of Ghana urges commercial banks to leverage stability of the financial sector to drive economic growth as they roll out new measures targeted at risk and liquidity requirements.
Your tasks as leaders of the sector is to translate stability into growth, to channel more credit into productive enterprises, to support SMEs, to finance critical infrastructure, and leverage digital innovations.
We are live with a finance lecturer for some analysis on these measures. Also in this bulletin, Ghana Stock Exchange records 71% growth in shares traded in 2024, while market capitalization hits 111 million cedis. Plus, driving agricultural innovation. Today on the Joy Business Van, we'll tell you how Legacy Crop Improvement Center is scaling operations and targeting the vegetable seed market. We have details of this and more for you. Please stay on. Thanks so much for your time. I am Pius Kojobakai. Look now at our stories. Trading activity on the Ghana Stock Exchange in 2024 was vibrant, underscored by heightened investor interest and liquidity. According to the 2024 Financial Stability Review, this reflected 992 million shares sharing hands with an annual trade value of 2.15 billion cedis in 2024. This is relative to 579 million shares traded at a total value of 818.2 million cedis in 2023. More in this report.
According to the report, the information communication technology (ICT) sector continued to play a pivotal role, contributing significantly to both trade volumes and values, while the financial sector and exchange-traded funds also made important contributions to overall market turnover. The market's growth extended beyond trading figures to market capitalization. The year ended with a better-than-expected market capitalization of 111 billion cedis, reflecting an impressive 50% year-on-year growth from 74 billion cedis at the close of 2023. The surge in market capitalization was fueled by the sustained rally in share prices and the listing of Atlantic Lithium and Cowbank preference shares, which deepened market participation and diversity.
This evening, the governor of the Bank of Ghana, Dr. Johnson Isiama, is urging commercial banks to leverage the stability in the financial sector to drive economic growth. Speaking at a meeting with Chief Executive of Banks in Accra, Dr. Isiama emphasized that the gains made in stabilizing the banking system must now translate into tangible benefits for the economy. More in this report.
The meeting challenged the banks to channel more credit into productive sectors such as agriculture, manufacturing, and infrastructure development, which have the potential to accelerate job creation and improve the economy at large.
Colleagues, the road ahead is one of opportunity that is matched with responsibility. Remember, we have a stable macroeconomic base. Inflation is easing. The currency is strong regardless, and reserves are healthy as we speak. Also remember that the banking sector is robust with the capacity to expand lending and deepen financial inclusion. And thirdly, remember that the regulatory agenda, as I've outlined, is forward-leaning. It is aligning Ghana with the highest international standards. Your tasks as leaders of the sector is to translate stability into growth, to channel more credit into productive enterprises, to support SMEs, to finance critical infrastructure, and leverage digital innovations to reach undeserved markets.
He also said the Bank of Ghana plans to engage the Ghana Association of Banks in the coming days to address concerns surrounding forward foreign exchange auctions and market liquidity.
At the same time, we will engage the Ghana Association of Banks in a structured discussion on proposals, some of which they have shared with us, relating to NOP support, relating to FX forward auctions, remittance coordination, and market liquidity, and all these with the aim of agreeing on practical, market-friendly solutions. Finally, we'll be undertaking a strategic business model thematic review, and this will involve a forward-looking assessment of the sustainability of bank strategies and will require the full engagement of boards of banks as well as senior management.
The meeting formed part of the central bank's ongoing engagement with the industry stakeholders to align policy objectives with private sector participation in economic development.
Let's bring in a senior finance lecturer at the University of Ghana Business School, Dr. Benjamin Amoa, for some analysis on these issues raised by the BoG. Now, thank you so much, sir, for making time to join us here on Business Live. And this is the third consecutive time the governor is engaging MDs of commercial banks in the country, basically on development in the banking sector. However, at today's engagement, the governor announced new regulatory measures targeted at credit risk, liquidity, and of course, reserve requirements for banks. What is the governor trying to communicate?
Very much. Like you rightly said, the central bank governor is engaging the senior management of the banks, and from your report, even to engage the boards of the various banks on how best, the banking sector or the intermediation sector can be made more supportive for all participants. So it is good that the central bank governor is engaging the senior management or the CEOs of the banks. Now, the areas of credit risk, liquidity, capital, and then forex is very important. This is not to say that some other operational areas of banking is not important. Credit risk basically is looking at deposited funds that have been transformed into loans or assets. If you have watched the Bank of Ghana's non-performing loan report, concerns keeps coming that banks are having difficulties in managing their loan books per the data that we get for BoG. It is not out of place that the central bank is engaging the banks to make the central bank's intention known to the CEOs of the banks as to what the bank has in mind. The central bank has in mind to help the commercial bank in dealing with credit risk. Liquidity risk is also very important. It's basically about assuring depositors that funds are available, and anytime they make requests for funding, they will have access to funding without, of course, the banks compromising the value of their assets that they've created. Now, this will involve the banks on one hand and also the central bank. Why? Because if the short-term assets that we have in creating liquidity is not enough, through discussions with the CEOs of the banks, the central bank can come up with maybe additional instruments, liquidity instruments that the banks can use in storing up liquidity so that if they need extra funds, they can then liquidate this instrument as a way of, making themselves liquid and having enough funds to meet withdrawal needs from their clients. You talked about capital. Capital is very, very important. And in Basel III, capital management is very important because banks are assuming risk level are increasing, and you want to assure depositors that the bank has enough cushion by way of capital, considering the risks that the banks are assuming in terms of their value creation process. And then, of course, you mentioned forex. Very important. International trade will demand that you need some forex. Now, how will the banks be able to collaborate with the central bank to make sure that there's enough forex in the system? We have heard recently that forex has been in short supply. Maybe it is time that the central bank considers publishing the forex allotment to the public. What do I mean? commercial banks periodically make requests to the central bank. All we hear is that the central bank has released $50 million, $100 million onto the market. We don't get the details of how much each of the primary dealers, that's the central bank, sorry, the commercial banks have received from the forex auction. If it is not something that is classified, the central bank will want to think about how best for each forex auction allotment, how much each commercial bank is getting. So that at least the market can read into it. The market can see it as an open and a transparent auction process. And then we can also follow the numbers and know where the forex is going and how the forex is being used. We are not saying that the central bank is giving and meeting all the forex needs, but one level up in the area of transparency in terms of the details of the allotment, I think will go a long way to help assure the public about the forex needs that we have.
That's fine. I appreciate your thoughts on that. But realistically, how do you think these measures would enhance transparency and, of course, align with the banking system, really?
Yeah, it's about engagement, and you need always to engage with the CEOs who are on the ground. The CEOs are the ones leading the various institutions to provide intermediation service. The central bank, the Bank of Ghana, is not a commercial bank. So for the policy to trickle down to you and I, then we will need a central bank governor or the leaders of the central bank to periodically engage the players on the ground, which is the commercial banks or universal banks, through their CEOs, so that the CEOs will know the intention of the central bank. The central bank will also make clear what they have in mind. They will judge all, and that the public can be informed. If you listen to the news item, it's more of the intention of the central bank going forward and how to make sure that the depository institution sector is supportive of the economy and the direction of the economy. So it is good. As we speak now, we don't have the details of each of the intentions, but I believe that as we wait patiently, the intentions will come out and we can all look at it and see if indeed it will help the depository taking institutions industry to perform its needed function.
And one other thing that came up at the meeting was a concern raised by the Bank of Ghana governor, where he was talking about the unwillingness of banks to drop their interest rates despite the significant drop in the policy rate and, of course, the subsequent decrease of the Ghana reference rate. Why are banks reluctant?
It is not the case that the banks are reluctant. One expects that in a competitive space, the banks will have to react or respond to the reduction in rate. But we also need to understand the banks that they have also contracted the deposit from depositors. It is very possible that the banks may have, promised some rate on these deposits that they now have to consider the sort of loans and credit requests that they will meet. So yes, rates have declined. From the monetary policy point of view, it has fed into the Ghana reference rate, like rightly said, so the banks must respond. I believe strongly that they will respond, but we need to give the banks some time for them to recalibrate their system, assess the pool of deposits that they are mobilizing and the cost of those deposits. Now, they will then factor that into the loans that they are going to create. So it is not on one hand that once the rates have declined from BoG, then it means that the banks will have to also decrease it. Yes, they will decrease, but they also have to look at their input cost and how that input cost by way of capital will influence their business. So yes, they will reduce it. It's just a matter of time.
And I'm wondering, for how long can businesses wait? Because, they've made this call on the central bank to take a look at the policy rate and, of course, the subsequent reduction in the Ghana reference rate. Now it's been dropped, and you are asking them to wait a little while. For how long can they wait?
They just have to wait. I know the banks are working on it because you need to understand, like I said, it's a competitive space. So it's just a matter of time. I think it was just last week that the MPC rate came out to be 25, that we saw the GRR rate being 16.97? So 16, sorry about that, 16.97 or so. So clearly, they are readjusting their rate, and we'll see the decline in the rate. But we should also know that it is not every borrower who will get it at the rates that they will quote. It will depend on the risk profiling of the borrower, the appetite of the bank for risk, and then some other factors that the banks will use in pricing the loans. So definitely the rate will go down, but it will differ from one person to the other in terms of the borrower.
Senior Finance Lecturer at the University of Ghana Business School, Dr. Benjamin Amoa, thank you so much for your input at this very moment. Grateful speaking to us. You're still watching Business Live. We are back with the Joy Business Van. Hello again and welcome back to the Joy Business Van here on the Joy News Channel. Now, today on the Joy Business Van, we continue our journey with Legacy Crop Improvement Center, a growing force in Ghana's seed production. Now, we trace the path of a seed from the field to certification, revealing the rigorous checks that guarantee quality and trust. And as the center turns a new page, we explore its bold move into the world of vegetable seed production.
From humble beginnings in 2016 to becoming a cornerstone of Ghana's agricultural transformation in 2025, Amos Rutherford Azunu, founder of Legacy Crop Improvement Center, is revolutionizing farming through climate-resilient, pest-resistant hybrid seeds, empowering farmers, boosting food security, and driving sustainable innovation from the heart of Otariso in the eastern region. The journey from seed to certified product involves rigorous research, careful breeding, controlled multiplication, and strict quality assurance, ensuring that every seed meets national standards and is ready to thrive in Ghana's diverse farming conditions.
The certification process starts from the land preparation. You need to register with the Ministry of Food and Agriculture when you are about to start. They have to come to that farm and make sure the farm is isolated or meet the desired isolated distance. If, for instance, you are going to plant maize, the maize farm, your maize farm should not be close to another maize farm to avoid contamination. Then the law actually says they have to be in that farm 4 times to make sure everything is done according to the law. After the harvesting, we bring the seed to our factory at Legacy Square. During the process also, they have to come and take a sample to the lab in Accra to make sure all the parameters are met. When that is done, then certification is actually issued to you, giving a go-ahead that you can market your seed.
Even after the seeds reach the market, a thorough post-market survey is conducted to ensure they continue to meet quality standards and perform effectively in farmers' fields.
So we have a range of customers from smallholder farmers to large farmers, aggregators, food vendors, everybody. So what we do, we don't discriminate. We make sure we deliver the service to everyone who comes to us for the service. What we do is that whatever you are looking for, that for seed, you are looking for tractor service, you are looking for planter, you are looking for drying or storage or broking service, we make sure we sit down with you and look at your need, then we provide solution towards that for you.
So what emerging trends are shaping seed demand today?
I think now, because of globalization, we know we are doing export, so there are a lot of demand in terms of the export of the seed. But I see a lot of middle class coming to the agricultural space now, where they don't want to travel far away before buying seed. It means that we, the seed business people, have to take the seed to their doorstep, and they want the seed to be delivered on timely manner. Not that I place order and 1 week I still have not received my seed. So people are now demanding the seed. They want it timely and instant.
Farmers receive more than just seeds. They are also provided with expert guidance to ensure successful cultivation and maximum yields.
We have a sales agronomist. We have somebody who has been trained. He is a trained salesperson in terms of agronomy and production. So these guys are assigned to the farmers. Anything that you need, you reach out to them, they provide it. If they have to come to your farm, they will do, and that is no cost to the farmer. That's from our part to guarantee the farmer that we are working with you. We are not only selling the seed and leaving you, but we follow you every step. We make sure you are successful in your farming business.
Amos says one of the major challenges facing the industry is the absence of local content policy to protect and prioritize homegrown seed producers making it difficult for local innovators to compete with imported varieties.
So far, I think the biggest challenge we have to do with the government inordinate taste for importation of seeds. There's no way the local people will be able to meet the standard or the demand of the seed that is demanded nationwide. But I think over some years now, if we have focused our attention on developing the local seed industry, because as we are investing, trying to do our own small way to improve the system, we realize the government is now importing seed left and right without paying attention to the local system. So if that happens, it serves as a demotivation to some of us who are investing in this space, where probably you will look for alternative source of your investment.
Legacy Crop Improvement Center is now expanding its focus to include vegetable seed production, aiming to diversify offerings and meet the growing demand for high-quality, locally adapted vegetable seeds.
When you look at the vegetable industry, you realize that it's actually importation. It's zero. We don't do local production here. So we have gone to agreement with the World Vegetable Center. They are giving us some lines, the seed to do a local trial. Once those varieties survive here, we can now start the multiplication of those varieties. So it's also going to make these seeds available in the cost will be more lower than what we used to import now.
Legacy Crop Improvement Center plans to expand its facilities in the coming years to enhance its capacity for delivering high-quality seeds and developing even better performing varieties for farmers across the country.
This is the pipeline coming soon. We are looking for one drought tolerance and provitamin A maize. The weather will be more resistant and higher in terms of higher yield than what we have now. What we have now is a Lega 26, which is 8 tons per hectare. We want to get a better variety that is almost 12 or 15 tons, but a proper drought tolerant variety into that effect, and a variety that is resistant to insect, for instance, like a fall armyworm disease. Legacy will be 10 years this year. We will do evaluation after 10 years. What next? Then we can scale it up to other part of the West Africa or other part of the country, and to see how we can serve the other farmers in better way.
Beyond agriculture, Legacy Crop Improvement Center gives back to the Otarisi community by supporting education through the payment of school fees and donating seeds to local farmers, reinforcing its commitment to shared growth and social impact.
And finally, before we go, Fitch Solutions says the sustainability of Ghana's macroeconomic recovery remains highly dependent on persistently high gold prices. Here's more.
According to the UK-based firm, a sharp decline in gold prices, for instance, triggered by a de-escalation of geopolitical tensions, would significantly reduce Ghana's dollar earnings and deflate its international reserves, placing renewed pressure on the cedi. In its analysis of the Ghanaian economy, Fitch said a substantial decline in gold prices would drive a sharp rebound in inflation. This will prompt the Bank of Ghana to maintain a tighter policy stance than currently anticipated. It, however, said it does not expect lower interest rates to put pressure on the exchange rate. According to the UK-based firm, although in theory, lower interest rates could reduce the attractiveness of cedi-denominated assets, real interest rates will remain comfortably positive. This suggests that the easing cycle is unlikely to prompt capital outflows.
Thanks for being part of Business Live for today. I am Pius Kojobaka, grateful serving you.